Mortgage Talk and more. I'm your host, Mark Hairston, where every week the goal is to bring a guest on to talk about their expertise in the real estate world. Potentially, in this case, a gentleman I really just met recently named David Thomason. And I'm on the board of the Westlake Chamber of Commerce, and he's a member of the Westlake Chamber. And we met at a breakfast meeting, and I said, I got to talking to you. So I'd really like to talk more about what you do and in the appraisal process and how it works with lenders like me.
Sure.
Okay, because there's a lot to it. It's not a simple conversation per se.
Correct.
So I wanted you to introduce yourself, tell us about a little bit about your background and how you got in the business.
Well, good morning, everybody. My name is David Thomason. I'm with CMA Appraisals, and we're a local real estate appraisal firm here in the Central Texas area. I've been doing appraisals for about 8 years now. Story how I got into it is kind of an odd one. I was in automotive for 20 years, decided I wanted a career change, and I resigned from automotive, went to a sand volleyball game and met a guy there. The guy that I knew said, "Hey, I'm looking for an appraisal trainee." I said, "I don't know what that is." So I looked it up, decided to do it, look into it, and I've loved it ever since. So
Awesome.
Total random happenstance.
Awesome. And you were saying during the hike, you were doing 3 or 4 appraisals a day at one time, So you've done thousands and thousands.
Thousands of appraisals, yes.
Are you still playing the sand volleyball?
No, don't play the sand volleyball anymore.
Where was that, by the way?
Over on Moon Tower Saloon.
Oh, yeah. I've gotten a little old to play sand volleyball. It used to be a lot of fun.
Yeah.
So tell us about, what exactly your role, let's say in the mortgage process.
Okay.
Now, you don't just work with lenders.
No.
You have other outlets of business. You want to talk about some of that too, because we want to promote your business as
Sure.
well. But talk about the appraisal requirements, if you will, in the mortgage process and some of the different types of things you've seen over the years.
In terms of what we're looking for?
Yeah.
So we're usually the last people out into a property. So, the inspector's been there. You have all the agents, the lenders. So the lenders, the buyers, agents, lenders send us out to determine what the value is of that home.
Right.
So we go out, we'll measure the home. We're going to take pictures. We're going to kind of look at quality, the construction, the condition of the home. And then we're going to go back, and after we have all the information from the field, we'll go back into the office, look up different properties in the area that kind of fit that pattern, fit that subject.
Those comparables,
if you will. Yeah. We have to bracket everything. So we have to bracket the square footage. So I've got to find something bigger and smaller in square footage.
Okay.
Lot size, bedroom count, bathroom count,
stories,
anything that property has. If it has a value, I've got to find something in the market that has something similar and then shows that it has a value.
Now, typically those properties, those comparable sales in the last 6 months.
Typically, yes.
Is that a requirement?
No, it's not a requirement. We try to stay 90 days because the market changes so quick. And then, there's certain things you just can't bracket, and you have to go either longer. Sometimes you go longer, and you have to make some market adjustments in time. Or you go out to different markets, and maybe you may have to make a location adjustment to find, you've got a unique property that you got to try to find this one little to see if there's any value in it.
Is there a minimum number of comps?
Three
Up
to how many you need.
Now, do you actually physically inspect the comps too, or do you just use off the data off the MLS?
Part of our criteria, we inspect from the street, so we have to go by and take a look at it and see and take a photo of it and say, we've seen the property. Do we get inside of it? No, it's just basically based on the MLS photos, unless we somehow appraised it before.
Yeah. Okay. Very good. And so, I own 3 properties in Austin, and we just got our tax bills in.
Right.
And, the county has this a way of they assess properties too. And people, a lot of people who don't understand the appraisal process and how detailed it is. So talk a little bit about the appraisal value that you would do and what the county would assess a property at.
So the county does what's called a bulk assessment. So they take the entire area and it makes like all the houses, they kind of get a middle, and then just every house conforms to that. The problem with that is every house is different in that neighborhood.
Sure.
So you have everybody knows there's different levels of people have updated the properties. Some people have never updated the property.
Yeah.
Some people have completely gut remodeled, and all those in the county are thrown into one big pile and just kind of averaged out.
Okay.
So if you have a house that's never been touched, you've never done anything to it, well, you're on that low end of the market. So we're going to look at specifically your house in your market. We did a lot of tax work last year, and the problem the county did is,
what do you mean by tax work? Explain that a little bit.
so we had people that thought their tax assessments were too high.
Okay.
So we went and did appraisal to try and help them lower their assessed value.
Okay.
What we found last year is, especially in 2022, is such a crazy year.
Yeah.
So we had huge increases through the first half of the year up until June, July, and then we had huge decreases through the last half of the year.
Mm-hmm.
Where 2022 ended up being pretty flat for the most part, but we had a huge mountain in between.
Mm-hmm.
Well,
when you say huge increase, are you talking about 10 or 20%?
Yeah, 10, 20% up
in the 6 months.
In 6 months,
yeah,
and
yeah.
then 10, 20% back down.
Yeah, yeah.
The problem is that the county assessors were all assessing properties in that peak.
Oh.
And so all their properties were high, and they didn't account for the come down.
Okay.
So we, every case that we did, we ended up having to go through. It was a crazy process because we did an appraisal. We sent it to the county. They said, nope, we're going to stick with what we got. We had to appeal. We kept having to appeal and appeal and appeal. And finally we get in front of the Texas Assessors Board. And they're made up of just regular folks. And we're on one side and the county's on the other side. We give them our evidence, and then they decide. Well, every time we finally got in front of the board, every time we won every case.
Every one
of them.
Wow. And you're doing this for other people.
Yes.
In other words, you're on hire, if you will, for
Yes.
as an expert.
Correct.
In appraisals.
Right.
Well, that's good to know. I didn't even know you could really do that.
Yeah.
We usually hire a company that kind of helps us with that, but that.
So the problem, well, there's not a problem. The difference in them is I charge a flat fee whether I can help you or not. That's just the way that has to be. Through those companies charge you a fee if you win, but then they take a percentage of how much they saved.
That's right. It's a percentage deal.
Yeah, it's a percentage deal. So, and then they're not actually doing an appraisal. They're just doing this. They're kind of doing an assessment value, kind of like a county assessors.
Yeah.
They're not. No one's ever been to your house to look at it, right?
That's right.
So they're not basing it on your particular house. That's the difference.
That's good to know. Matter of fact, that's really good to know, because we're going to call you next spring.
Okay. We'll look at it.
For sure. Because taxes are getting kind of crazy.
Yeah.
Now, when I'm dealing with a client on a mortgage loan, we kind of talk about the process. I try to explain what's going to happen the next several weeks in the process. And of course, the appraisal process is part of that, and they keep thinking, not always, but sometimes they think if they have an inspection, why wouldn't it an appraisal? Okay. Explain that distinction a little bit.
So the inspector is looking for physical areas of the home. They're looking for, is there mold? All the appliances work, all the plugs work. Plumbing, right? So we're looking at the overall home in terms of its value.
Yeah.
So one is a physical inspection, one is a overall market value inspection.
Okay.
So
that's kind of what I explained them to.
Yeah. So we're still looking. We're still looking at physical things, but we're not going to dig into it. We're not going to check. We're not going to go behind up and look for mold. We're not going to.
Yeah.
So we're not getting it. You want to do both, because you want to make sure your house is sound, structurally sound as an inspector. Then you want to make sure it's worth the value that you're willing to pay for it.
Sure.
So
it's a two-step process.
Two-step process, right?
Yeah. Now, let me ask you this: if you see noticeable defects, like the slab or a roof, will you bring that up?
Yes.
Okay. I assume you would.
Yeah, we still have issues of safety issues. Like the most obvious ones are like you have things that have no railings. We have to call that out. Say, hey, that needs to be fixed. Before it can be appraised.
Okay.
So, but everything we do. So if I say that railing needs to be done, it's up actually to the lender. I can only make the suggestion. It's the lender that has to actually say, yeah, that's something we want to take care of or not. When I walk in a home and it's real, the floors are very uneven, I can notice some settlement issues.
Yeah. And you'll note that?
I'll note that and then leave that to the lender to make the discretion what they're going to do at that point. Hey, I noticed there's some settlement issues. It's up to you now to decide what you're going to do with that information that I give you.
Got it. In the old days, when I say the old days, I'm talking about back in the 80s.
Right.
I got in the business in 85 and seems like appraisers, FHA appraisals, or even conventional at the time were pretty strict. It seems like they've gotten a little bit looser as far as condition goes. Would you say that's probably still true?
No, I think you're still pretty strict on some of the things, especially FHA. FHA is very strict on some of the policies they want.
Like what?
Lead-based paint. Anything built before, I believe it's 78.
Yeah, 78.
78. Has the paint. And it's just like you can't, if you have peeling paint before 78, not only can you scrape it off and we have to repaint it, you have to make sure none of those paint chips hit the ground.
Oh.
If it does, you got to collect those paint chips off the ground because it's all lead based.
I didn't know that.
Yeah. FHA, you got to check all the appliances, make sure the appliances work. I looked at one the other day. They didn't have a permanent heat source. so it wouldn't pass FHA. It doesn't have a permanent heat source. I had a friend that had
It just had the floor heaters or something.
yeah, plug-in heaters.
Yeah, interesting.
Or it had the AC, or they had the AC wall units that also serve as heaters, but they're not permanent.
Yeah,
they can be removed, so they're not a permanent heat source.
Got it.
I had another one. I had a friend that did a manufactured home and didn't have the skirting around it.
Okay.
Well, FHA, you got to have the skirting around it.
Right.
So there's definitely some different, every home's different, but there are some different issues that FHA looks at versus a conventional home.
Yeah.
And right now, we're finding out is a lot of agents have never dealt with FHA.
Yeah. It started to come back.
Right. Because during the boom, FHA, you couldn't qualify for an FHA.
No.
It was too far behind.
No.
They just wouldn't qualify. FHA is never going to pay over market value.
No.
So no one could qualify for FHA. Well, now 80% of my loans are FHA.
Now?
Yeah.
80%?
Yeah. FHA is huge.
Wow.
So all these agents are like, what do you mean it doesn't pass FHA?
Right.
Well,
because they don't know.
They don't know. They've never dealt with FHA.
Yeah. And I know you're big in education. You do some
Right.
courses training realtors on.
Right. I did the one that I talked about that didn't have a heater. She called me out, says, I don't know. Can you come look at my property and see if it would pass an FHA inspection? Because I don't know.
Yeah.
So we went out and there's a couple things I had to show her. So that.
Yeah.
So,
But it would go conventional?
probably would have went a conventional, yes.
Yeah. Interesting. Yeah, because back in the crash of 9 and 10, 8, 9, and 10, somewhere in there, the conventional market pretty much went away.
Right.
FHA was the only thing we had at VA, of course.
Right.
I wrote my first CE class called FHA is the way, because that's what it was.
Right.
But I'm certainly not an appraiser, so I didn't go into that. I went more on qualifying for the mortgage itself.
Right.
But so sometimes, for whatever reason, there could be lots of reasons. Appraisals will come in low.
Right.
A property sells for $600,000, it may come in at $550.
Okay.
So talk about how we can work with you on not challenging it, but is there anything we can?
There's actually ways to challenge it too. So a couple of things. The number one issue that usually that I am different than what a contract price is. Either I'm higher than the contract or lower than the contract is the square footage.
Okay.
The square footage is wrong. The county records has it wrong. The real estate agent just copied from county records, put that in there, and it's wrong. It's either too small or too big compared to what it actually is. And so we're off.
And where did that number come from? The original builder?
That I don't know.
Okay.
That comes a lot of times from the builder. Other, if you do a remodel and you get permitted, then it gets county records. But
or if you don't get permitted.
Yeah, if you don't get permitted.
Yeah.
But county records has a problem, especially TCAD, Travis County records, combines everything into one big lump sum.
Yeah. Okay.
So if you have a house with a guest house, that guest house is not part of your square footage for your home, but TCAD will actually combine into one number and put that as the home's size.
Yeah.
And it's not correct.
Yeah. You were mentioning that earlier when we were talking before the show,
Right.
that there was a property that a small home with what they call an ADU or
Right.
attached dwelling.
Right.
Explain that one, because that could be an issue.
Well, it is an issue because it was originally it's marketed as a 2,200 square foot home.
Mm-hmm.
Well,
where is it approximately?
It's in East Austin on Holly Street.
Okay.
So right in the
heart.
Right in the heart of
Yeah.
So 2,200 square foot home. Well, I went and measured it, and I saw the second home back there, but it was a fence. And those areas really known for having two properties. Sometimes, you'll have a condo unit.
There was a fence, and then the property.
Yeah, there was a property. The one I measured, then there was a fence, and then another property.
Oh, interesting.
I didn't even count that.
Right.
So when I started doing the research, I'm like, where's this 20? I'm 1,300 square feet,
right?
And they're saying it's 2,200. And I thought that's a big
double.
Yeah. So I started looking at there's another home. Well, that other home is not part of the square footage.
It's part of the transaction.
It's part of the transaction, but it's not part of that house's square footage.
Yeah.
So, and then typically those ADUs aren't worth as much as the home. So I haven't yet to determine what the value of this home is, but it may be hard hitting the contract price because it wasn't listed properly.
Yeah. Yeah. ADUs are all shapes and sizes.
Correct.
An ADU on sometimes may be as big as a home. Correct.
No. Well, there's always
not in this case, but sometimes
it always has to be. So the bigger one's always going to be the
primary,
and the smaller one's got to be the ADU.
Okay.
So
now, as far as mortgages goes, unless it's changed in the last few months, Fannie won't buy anything with more than just one ADU.
No, it's only it's one. You can only have one per Fannie. Yes.
Yeah, but I've seen properties that have more than one.
Right.
But we really can't give any value to those.
Right.
So that's interesting, and that also kind of speaks to if you wanted to enhance your property. Let's talk about improvements.
Okay.
A little bit. and we talked about this a little bit, what things may improve the value of a property for appraisal purposes,
Right.
and what you may spend money on. Like we talked about, I put on a metal roof last year,
Right.
and I like my metal roof,
Sure.
and it's pretty, but it's probably not worth anything per se.
Probably not worth much more in terms of value. So for something to have value, I have to find something like it in the market. Then I have to be able to prove that that particular item gave a value increase, which when you get into a roof, it's hard to really pull that specific item out of the market.
Right. Because it's required.
Yeah, it's required.
Everybody has one.
There's always a big difference between things to cost to fix a property and things to enhance a property. I had a buyer that bought a home on, he bought it cheaper because they needed foundation work.
Okay.
Well, he put a bunch of foundation work into it and then tried to get it refinanced, and he put $30,000 worth of foundation work into it. We only went up in 10 grand.
Really?
Because the house is, I mean, he got like a $10,000 discount. Well, that was what the property. So
yeah.
There's some things that are maintenance work, roofs, AC work, painting, landscaping, something that people expect that to be good.
Right.
And then there's stuff that will actually enhance your property, an updated kitchen.
Okay.
An updated bathroom.
Okay.
So a lot of times updated flooring. Sometimes
popcorn, take that off.
Take that popcorn off. Sometimes you get updated, you can get a value with lighting. So I can't make so there's a couple of things. One, sometimes I can't make a specific adjustment for it. Like I can't say you got new lighting, so I'm going to give you an extra $5 grand. But what I can do is when I'm done with all my adjustments, I've accounted for square footage and lot and bathrooms and garages, and at the value I have a range, and say my range is 500 to 550.
Okay.
But my subject has upgraded cabinets, upgraded lighting, more upgrades to it. They've done more maintenance. So I'm going to move toward that 550 because the quality is a little bit, it's nicer because they've done more stuff to it.
Got it.
Versus that person, well, I haven't really done a lot. There's not a lot of uptakes. I'm going to stay at the 500.
Got it.
So sometimes there might not be a line item, but you can get credit based on that adjustment range.
Got it. And we talked earlier, that appraisals it's not an exact science. I mean, there's a lot to it,
right.
But on some level it is subjective, like you're talking about.
Right.
So let's say you came in at 550 and another guy is looking at the same property, maybe came in at 5.25 or 510 or something like that.
Right.
So
that happens because it's my opinion of value.
Right.
That's the big word, is opinion. It's not set in stone. It is just what one guy thinks of the property that he looked at.
Yeah.
So if you go get another appraiser, he may come up with a different opinion.
Yeah.
So,
but within a few percent.
Well, it should be within a few percent.
Not big wide swings.
Yeah. If it's huge and there's somebody did something wrong or something's not, something's wrong.
Yeah. And that kind of like credit scores. You get 3 scores.
Yeah.
And they're not going to be 100 points apart.
Right.
They may be 25 points,
right.
Because of the different algorithms of that.
Sure.
But so talk about in this market or any market for that matter, what we talked a little bit about this, but touch it specifically on what gives you the best bang for your buck. Would you say kitchens and bathrooms?
Kitchens and bathrooms, yes.
Okay, not a pool.
Not a pool. Things on the outside typically are not going to be good return on investment.
Okay.
I know I put a pool in my own home. It's cost me about $130,000. It's probably worth $50 if I'm lucky. Outdoor kitchens are not really worth a whole lot.
Really?
No. Solar panels are not worth anything.
Yeah.
The problem
is, if you appraise a property with solar panels, do you give any value to it?
Typically not. And there's a couple reasons. One, if they're leased or you're still making payments, they're considered personal property still. So the lender won't lend on them because they're personal property. But if you paid for them, completely paid for it, the problem is say, you tell me, hey, I get 260 kilowatts per hour worth of savings on my property. The problem is the MLS doesn't give me that information on what those other ones do. So I can't make a fair comparison. And are your solar panels new technology? You only put them on 2 years ago, and these guys put them on 12 years ago. Technology's changed a lot in that time.
Yeah.
So there's, unless I know that kilowatt per hour, which I don't, MLS doesn't give me that information.
Yeah, you wouldn't know.
I can't make that.
Interesting.
Can't really make an adjustment.
Because sometimes those are expensive.
$30,000-$40,000. Yeah, someone put almost $60,000 in a whole solar panel array, and it just really wasn't. But again, I can incorporate it into that bottom line. I have that range. I can incorporate a little bit in that, but I can't. There's no line item I can give for it.
Right. Yeah.
The market and the market so far, what I've seen is just not willing to pay a lot for solar panels. My wife, for instance, won't buy a house with solar panels. She thinks they're ugly.
Yeah, I don't like them either.
So I want to put them on our home just because I want to, eventually be off the grid. But she's like, no, they're ugly.
Yeah.
But all right, well,
the
happy wife, happy
that discussion pretty quick.
yeah.
Yeah. And so talk about challenges you've seen over the years. I mean, sometimes, a neighborhood property is sort of a cookie cutter deal. There's a lot of comps. There's a lot of data there.
Right.
Talk about areas that are problems or challenges as an appraiser.
So typically the more complicated rural properties are really sometimes a challenge because you don't have
On acreage.
Right. If I'm looking at something like in Wimberley,
Okay.
there's not a neighborhood. I'm looking over the whole county, sometimes Hayes County. Sometimes I have to go into Kamal County. I have to go into different counties trying to find, you've got a horse farm or you've got a big barn or you've got, I had one that had a guest house, a barn, a horse stables. I've got to try to find all that and see if it's worth anything.
Yeah.
So, typically things on the river, because you got to figure out how much that waterfront property is worth, because you have your actual lot size and you have the lot up against the river, and that water frontage is worth something.
Yeah.
How much is that worth? How much is the view worth from looking at over the hill country or looking at water? It's always subjective, so that's always difficult. Those are always feelings, and it's hard to put an adjustment dollar on feelings.
Yeah, that makes sense, because the house I own a home in Lost Creek on a corner, and it's not really in a valley, but it's on the corner. And then next to me is my neighbor, Mitch is his name. He's got an unbelievable view. I mean, next door we have a little bit, but he's got this massive view. And I'm thinking, what's that really worth? I don't know.
It's tough.
It could be worth $100,000.
It could be. It's all in the eyes of the buyer.
Right.
If you find, I did an appraisal they were doing a pre-listing, and I'm like, here's the deal. If you get that one buyer, your house is worth X.
That's right.
But if without that one buyer, your house is probably worth this. This is probably where it actually will sell for. So they're trying to hit this. They're trying to find that one buyer. So I get that,
Yeah.
But you got to find that one buyer is going to fall in love
who's willing to do that.
Right.
It's kind of like back in 2021, for sure, people were bidding way over list price to buy property because of inventory and COVID and all that sort of thing. And, they had to, most of the time, they had to spend the extra money out of pocket.
Yeah.
Because the property wasn't going to appraise.
No, it was not.
It just wasn't,
So
you probably saw that a lot.
Yeah, we saw that. And it was funny. We saw once they bought the home, we just found a lot of refinance right after that, because they took their money out of 401ks and their retirement to get cash. Then they were trying to refinance it and put it back into back into their retirement. So we saw a lot of that.
That was probably the wildest time you've probably in your business. Huh?
Oh, by far. It was crazy. We were about a month and a half out on inspections.
Wow.
So it was funny because lenders would call us and we say, hey, we're a month and a half out, and our standard fee was $600. It was $600. Okay. Then they call us. Every one of them called us a couple days later. Is there any way we can move that up? So we finally had to come up with here's the deal. We'll move it up $300 a week. You pick how far up you want to move. It's $300 extra a week.
Okay.
So you pick it up.
In a week, it could be a couple grand.
Yeah.
Or whatever.
Yeah. If you move it up a month, we're looking at an extra $1,200 on top of the original. So
yeah.
But you pick it. You know.
Right. So here's your menu.
Yeah, here's your menu. You figure it out. And then a lot of them did. And we would move up and they jockey for spots.
Yeah. I remember too, because I would have to talk to clients, say, hey, if you want to close this deal in 30 days, you got to pay.
Yeah.
But in the old days, and I mean before Dodd-Frank and all the changes that came around after the crash, I was able to call my buddy Joe or Tom and say, hey man, can you get out there? And he would tell me what he could do for me.
Sure.
Nowadays, you guys are basically hired through these CMAs, correct?
AMCs.
I'm sorry, AMCs, because your company CMA.
Yeah. So because of Dodd-Frank, what would happen is say, not that I didn't know you back then, but you were my best client.
Yeah.
You gave me 80% of my business.
Right.
So I had to make you happy. And you came to me and said, man, you had a client that says, I need this deal to work. So you came to Dave. Hey, Dave, I need this deal to work.
I need every deal to work.
Yeah,
Dave.
I need this one to work for sure.
For sure.
This one has to work. Like, well, he's my best client. I guess I'll make it work.
Yeah.
2 months after that went on. So they're trying to do Dodd-Frank to remove that relationship so that you can't put that pressure on me.
No.
So now we go through an AMC. So you're in a mortgage, you need an appraisal. You call the AMC and the AMC calls me.
Right.
So we work for the AMC of almost majority of mortgage processes.
Yeah.
And that's good and bad because, if you're trying to get information, it's got to go through this medium channel that sometimes it takes forever to get that information back and forth.
Right.
Or if I could call you directly, say, hey, I've got this problem. What do you want to do?
Yeah.
So we're missing out on some of that. It takes longer.
Yeah, it does.
And then you also have the, some of these AMCs are really, we're having a problem with AMCs in our industry right now.
How so?
You send an appraisal, hey, I'm willing to pay $800 for this appraisal. Can you get it done? AMC says, sure. But they go out and shop it forever, trying to get the lowest bid they can.
Oh.
So instead of paying, most of mine will say, well, here's $600. Can you do the appraisal? And we're going to keep 200. Great. A lot of these AMCs now are saying, well, can you do it for 200 and we'll keep 6?
Really?
Yes. And they'll
I didn't know that.
And they'll shop and shop and shop and shop and shop and shop. So they're spending weeks shopping. And then when you finally get the bid, oh, we need it tomorrow.
No.
That's what's happening. So when your appraisals may be taking along, it's because your AMC may be trying to shop to get the lowest bid. And then you've got the lowest bid. Is it really going to be a great appraisal?
Right. I didn't know that either.
Yeah. So sometimes when it's taking a while, that AMC may be
gouging.
Yeah, they're trying to gouge the process.
How many AMCs do you work with?
On average, I work with about 10 to 12. I'm on like 90 of panels.
Okay.
But some of them we won't work for because of that.
Okay.
Because they're shopping at the low, and you'll agree to a bid. They'll take it away because someone came in an hour later with something lower, and so they'll take it away from you. Some of these someone we won't work with.
Interesting. Yeah, as a broker, I work with a lot of different lenders, and they all have their own AMCs set up. So I don't really get involved in that process too bad. And we haven't had a lot of challenges with values, certainly this year.
Yeah, I mean, for the most part, people are starting to realize that what the house is worth. But, a lot of it, again, is based on that square footage. If square footage is wrong, your value is going to be off.
Right. And we're working, as far as I'm concerned, we're kind of moving back into a buyer's market. And, dang,
we're out of time already.
I wasn't paying attention, man. Hey guys, I was really enjoying my conversation with David. The time's by me, so we are going to sign off today, and we'll talk to you next week. Thanks for coming.